Yo, what's going on, everybody? It's Thursday, July 6th. We got some mean looking clouds coming over here right now. Maybe I'll show you. Look at it. Look at that, man. So, something's gonna happen. And there's some thunder right there in the background. Like today, market was down, but look, folks, at this point, like, I just find this kind of behavior to be like, it's humorous, it's comical. I mean, we had a better than expected job report on the in the data today, and then everybody, all the monetarists, I mean, they freaked out once again and they sold. And I kind of like, I just love watching this now. Like before, it was a little bit annoying, but now I just look at it and I laugh. Like it's just like, how much more evidence do you need that economic growth has not been harmful to the stock market? I mean, we've been going up, so you have these reactions. You still have these reactions. I mean, these monetarists, they just want to sell this market so bad. I mean, this is so deeply ingrained in their behavior. I don't see how you cannot look at this now. I mean, it's kind of like, these are the proverbial, the lemmings, the sheep that just like they all, there's like these schools of fish that all, they all move simultaneously. I mean, there's so many examples of this in nature, and this is just being replicated by human behavior in the stock market. I mean, we've seen 8 or 9 rate hikes, and the market is up almost near its all-time highs. A lot of stocks have made new all-time highs. So I don't know. For me, like, I don't even react to it. It doesn't bother me anymore. Like, I just find it to be humorous. I find it to be comical. So that's what happened today. And, so if the Fed's going to raise some more, they're going to raise some more. They're going to go in incremental 25 basis point if they're going to continue to do this. And that's just going to feed through to the interest income transfers, which, right now they're running like between the discount on T-bills and new issues and interest on treasuries, that's up to nearly $200 billion a month. So, and that's just getting going, like I've been saying this whole time, because a lot of the treasury interest, we're still waiting for these securities to mature, and then when they roll over, they're going to have the higher coupon, and so that's just going to add to the the fiscal flows. It's just going to keep adding and adding and adding, and that's just that's money in people's pockets. It's money in institutional pockets, and that doesn't even count what the Fed is giving the banks. So I mean, I don't know. I mean, for me, I just look at what's going on right now, and I think, like, it's just hilarious. I mean, this is I don't know if you want to call it classic human behavior, but this is like mass behavior. It's like classic crowd behavior where, people are running around behaving like chickens with their heads cut off. And I think it's going to come down pretty hard right now, folks. Check it out. Florida, man, tropical climate. Anyway, so that's just a short update for today. I wouldn't be concerned about this really whatsoever. I think we're going to be in a positive trend at least until August 15th. August 15th, you're going to have a quarterly interest payment, and that'll peak us out on the fiscal for a while, at least going into September, because September you're going to have a quarterly corporate tax payment again. So I don't see a problem from now until mid-August. And then if you want to take some profits at that time, I mean, even if you look at, for example, if you look at investor sentiment, I looked today at the AAII weekly sentiment survey, and that bullish sentiment popped up to like 48%. But that's still historically low. That's not a high level of bullish sentiment. I mean, that thing could go much, much higher before we even get to the point where I start talking to you guys about this is getting overdone. I mean, it is nowhere near being overdone. And let the Fed do what it wants to do. I mean, it's a total monetarist paradigm that's going on. We all know this, and it's completely wrong. It doesn't do what their intentions are. It's not gonna fulfill their goals. It's not gonna help them achieve their goals. If anything, it'll keep inflation from coming down. And got this bug flying around. And it's just going to keep pumping money into the economy. And that's why we got that strong job report today. And I won't be surprised if we get a strong one tomorrow on the government job, on the BLS job report. And they're going to do the same thing. They're going to freak out. They're going to panic. This was like literally a panicky move today. I mean, it's just like, you could tell like they want to sell this market so bad. They want to sell it so bad. And every time they do this, it's like they're selling into the hole, and then it comes right back at them again. And I love it. I love it. But we got to get rid of this mentality one way or another. I don't think the institutional mentality that central banks have is going to change. But if people lose money, that's good. That's what we want to happen. Like, let them lose. Let them lose. And this is money that you should be putting in your pocket. Anyway, I think it's going to pour any second. I'm getting out of here. I'll see you tomorrow. Bye.